Hey traders, and welcome back to some market insights with yours truly, Richard, serving traders responsibly here with Orbex. Today is the 11th of February 2019. It is 10:19 a.m. Eastern European Standard Time, and we do have Indices day today. Today is Monday. Hope you guys enjoyed the weekend and you're back for more to actually tackle the markets. Now, we're going to take a look at the economic calendar because the pound would be the main focus, the main currency in focus, and that obviously could translate into some nice volatility happening for the FTSE 100. So FTSE 100 is going to be one of the main assets in focus today, but I'm going to cover the US 30 as well, S&P, NASDAQ, and the DAX, the Germany 30 index as well, and a couple of hints on the VIX, the volatility index. So by taking a look at the economic calendar in front of us right here, we do have, let's say, the most important market movers for the day would be the Swiss franc right here, the CPI, Consumer Price Index, which was less than forecast actually. Okay, and the main important one would be the pound manufacturing production, but also the GDP, the gross domestic product. Okay, so in other words, the pound could have volatility today, and that would obviously translate to FTSE, affecting the FTSE actually. So if I just jump on the FTSE chart on the daily time frame, just wanted to point out the fact that it has been, let's say for instance, this sliding channel, this descending channel right there. Yeah, I am labeling it as an ABC with a landing diagonal in the C leg with a 5-wave sequence. So the descending channel seems to me like it has been, a breakout could have occurred. Okay, however, if this would be destined to go bullish, then a proper correction should actually occur. In my personal opinion, this is not really enough for the FTSE to present that type of correction, which would actually send it towards a rally. So, in other words, what I'm saying here is that a correction could basically occur right here and continue to possibly end a larger, a more like a proper type of corrective sequence before more upside would occur. And if this would actually occur on the downside, then I would be eyeballing the 6907 levels, because that would be the, in my personal opinion, the most important level and a decisive moment for the FTSE. Because if it does break it on the downside, if it breaches those levels, then more downside could actually occur, and a support on this could actually send it towards a bull market continuation. But for that to occur, the structure inside here has to be corrective and to possibly point towards more upside in its corrective sequence. And by the time it actually unfolds, we'll have more details to basically know if this setup could actually occur. So next one would be the Germany 30, the DAX on the daily time frame. And as you guys can actually see from last week, I actually mentioned this as well. I'm labeling it in a very complex structure right here, a 333 in a larger degree correction. And this ending diagonal that I was talking about last Monday, actually seems to be taking effect. Yeah, and what I mean by this is the fact that this structure could indeed be a running flat, and this could be just the start of a bearish impulse. And for that, I'm just going to zoom into the 2-hour time frame. And you can actually see now, last week I was actually talking about the possibility for the Germany DAX, Germany 30, the DAX, to possibly start a bearish trend, let's say, and it did actually occur, right? So DAX has fallen a lot since last week on Monday. Now, the way this is unfolding does look like a 5-wave sequence on the downside. This could either be an A or, worst case scenario, a 1. As you guys can see, I am actually bearish still on this, and I would actually expect a corrective pattern for the upside before more downside could be in play. Okay, Now, next would be the US 30, the Dow Jones, and seems like what I was actually talking about last week seems like it could be taking effect in a sense that this kind of entered a vibration zone, a point of interest where it's actually struggling, bumped its head, let's say, and kind of wants to make an important decision for the markets, right? So this X wave could have ended, right? And for that, I'm just gonna zoom in for the 4-hour time frame, and you guys can actually see right here what I was talking about on Monday for this ending diagonal to possibly deliver a start of something bigger on the downside. Okay, so let's just continue right here. Now, the way this went on the downside kind of looks like it broke out, right? It breached the ending diagonal possibility. So it would be normal, obviously, right now to have a corrective sequence, right? Let's say maybe an ascending channel in a corrective type of corrective manner to possibly send it towards more downside. So we'll actually see how this unfolds. Now next is the S&P 500, still on the 4-hour time frame, and it did actually start dropping with the Dow Jones along with it, and obviously with Nasdaq. So the way it slid on the downside, right? It went on the downside. Now it seems like it wants to correct. Now, obviously, this looks to me like it's some sort of a retest, right? And we can see that it kind of wants to retest that previously broken trend line, and it could gain rejection from there, and it could continue the bearish side. It's as simple as that. Now, moving on the Nasdaq, the sequence that I'm labeling would be in an ABC with an expanding ending diagonal in the C leg. So 1, 2, 3, 4 right here, and the ending diagonal, contracting ending diagonal in the last 5th leg of it. So this setup kind of looks okay. Now, same thing like the Dow Jones and S&P, the Nasdaq. You see, it actually went right there on the downside. Kind of looks like it could have more continuity for the bearish side. And the reason I'm just mentioning all these facts for the global indices would be the fact that the VIX, the volatility index, could be located once more at a juncture, in the sense that this could be ending somewhere around here, and could, even if this move would be limited, still it would have effect on the indices, okay, on the bearish side. So if the VIX would actually rise from here, then indices could be in trouble once more. So we'll actually see. Now, the point is that this could go right about there, possibly deliver a bullish divergence right there on the downside, and even if it's corrective, still, as I said, it would affect the US indices, global indices, EU, and etc. So yeah, that's about it for today. Until next time, stay in the green and many pips ahead.